Hi, my name is John Garvin. I'm the president and founder of benicoltd, an employee benefits consulting firm based in the far northwest suburbs of Chicago. We are pleased to present this video about executive disability income plans as one in a series of videos designed to provide a basic level of understanding around employee benefit concepts and ideas of interest to owners and managers of businesses of all sizes. Most companies provide long-term disability insurance on a group basis to their employees as part of their benefits packages. Unfortunately, the vast majority of group long-term disability plans fail to adequately protect highly compensated employees. Let me explain what I mean by that. First of all, most group long-term disability plans are employer-paid and are therefore subject to income taxes. So if a plan is said to replace 60% of one's pre-disability earnings, that may be true of the gross benefit that's paid by the plan, but once income taxes are withheld, that benefit is going to shrink from 60% to something in the low to mid-40s for one's highly compensated employees. Further, many group long-term disability plans impose an overall cap on the monthly benefits that are paid, most often in the range of $5,000 to $10,000 per month. Just think about it. A group plan that caps benefits at $5,000 per month is only replacing 60% of a $100,000 salary. A plan capping benefits at $10,000 per month is replacing 60% of a $200,000 salary. Between the taxability of the benefit and the benefit cap, highly compensated employees oftentimes are being discriminated against in reverse. Finally, it is important to note that many group long-term disability plans do not consider incentive-based compensation, such as commissions and bonuses, in their definition of covered compensation for benefit determination purposes. Therefore, the combination of these three factors can leave one's highly compensated employees exposed to a very significant loss of income should they become disabled. Other limitations of group long-term disability plans includes overly limited occupation definitions and lack of portability. To the first point, many group plans limit one's own occupation period to a maximum of 24 months, after which time the individual is considered disabled if they're unable to engage in any occupation for which they're reasonably fitted by virtue of their education, background, and experience. Potential exists for the highly compensated employee to lose benefits after the initial 24-month period, even though he or she cannot perform the former job duties. To the latter point, a lack of portability when employees leave employment, coverage under these group plans simply cease. So given these disadvantages of group long-term disability coverage for one's highly compensated employees, we believe the solution is to implement an executive disability income plan to make up for the group policy limitations. Such a program typically offers, number one, compensation defined to include bonuses and other compensation. Number two, higher benefit maximums up to 75% of all compensation, for example. Third, portable policies. In other words, they go with the executive and they're not tied to employment. Fourth, protection of the executive's own occupation throughout the duration of the disability, not limited to 24 months like the group plan sometimes does. Fifth, level premium guarantees. Sixth, oftentimes there will be an optional conversion at the time of a person's retirement to, from a long-term disability policy to a long-term care policy. Seventh, no benefits are offset in the individual disability policies in these executive plans by Social Security or retirement benefits like you have with most group plans. Isn't this kind of individual insurance expensive, you might ask? Well, an executive disability income plan is normally more expensive than group coverage because of better definitions of disability, guaranteed price, portability, and flexibility. However, because of the buying power that results from a group purchase of individual policies, an executive plan is often 15 to 30% less in cost than a typical individual disability income contract purchased outside of this kind of arrangement. Another obvious question about these policies has to do with how difficult is it to obtain individual coverage, and do they require a medical exam? The answer is usually no to both questions. Depending on the underwriting carrier, the policies can typically be issued without a medical exam if the employer pays for the policies or there are at least 3 executives in the plan. Also, because of not having to be subjected to a medical exam, the applications are simpler and the underwriting process is relatively painless. Another question is it hard to coordinate benefits from the individual policy with the company's group plan? Well, it really isn't. The group and executive plans dovetail to provide maximum benefits at a very reasonable cost. And finally, what are the benefits to the employer from doing this? Bottom line is the ability to attract and retain executives with an important benefit while doing so as a tax-deductible business expense. That concludes our overview about executive disability income plans. If you have further questions about this subject or would like to consult with an employee benefits professional about how to incorporate executive disability income plans into your company's overall benefits package, please give us a call at 847-669-4800. We're really glad you joined us today, and we hope you'll take the opportunity soon to view the other videos in our series around employee benefit concepts and ideas of interest to owners and managers of businesses of all sizes. Thanks for watching, and bye for now.